Good morning all, welcome to the market review for Friday the 14th of March 2014. And starting off with the daily chart for the British pound, we can see that the market traded high yesterday, traded up to the 62% retracement there and found some selling and then moved lower. And the reason for the selling was very simple. The Dow, which seems to move together with the pound or vice versa, sold off owing to the Goldman boys selling off 175 million of the cheap shares that they were allocated in the 2008 crisis. So this had an effect. When the Dow goes down, the dollar goes up. So if the dollar goes up, then the pound goes down. And you can see this yesterday with the pound coming off in the afternoon. And as you can see this more clearly in the 30-minute. It's a shame we just didn't get a sell signal on there. For some reason there wasn't one produced, and unfortunately the market moved down without us. But not to worry, the market's currently sideways. We've just had a potential buy, but the market's already hit the stop before hitting the entry price, and therefore the trade is cancelled. The same in the 60-minute. There wasn't a signal there either, which again is a shame, but it is what it is. We did have the natural psychological level here at the 167 level there, where the market came back through. And as I've said before, there is a trading strategy based upon these as well. When the market closes through the psychological areas, you can see how the market then holds. The market comes back down to here to retest the 166.50 and then goes up through the 167 back through, and then it was south and through here as well, convincingly on increased volume. So that means that there is selling around in the down move. The market moves lower again, and then we just traded down towards this area here. Of course, we can see that this is about a 62 to 76% retracement as well from the high to the low as well. So no surprise that the market's finding some support here. Again, in the 60-minute, we have a potential buy at the moment. That depends whether this is filled within the next 3 bars or not. So that's the next 3 hours for the 60-minute chart. So a good move in the market, but unfortunately we didn't get it in the pound. But in the euro, we had a decent move in the 15-minute chart. You can see that it was picked up there. And the Aus dollar had a nice move to the upside during the morning session as well, offering it a few pips. And for those of you that are new to the market view and also to TUFXP, there's those who want to trade shorter time frames, the 15 minutes and also 15-minute Aus dollar euro as well, just to spread it around if you want more trades. That's what those two are for in the market view. My main focus really is the pound. Having traded for some 20 plus years, I tend to find that if you stick to one market, you then get to discover all the nuances and the personality of that particular market, and I also find it easy to trade on that basis. But again, using general principles, you can see how the market traded up to the 90 area here, and then the market moving down. Again, the support here as well. So an interesting pattern there as well. Actually, there was something I was going to show you, which was this here. Excuse me. We've got this buy signal in the Aus dollar yesterday morning, and it shows a potential loss. Now, there's a saying in the markets that most people lose money trying to avoid losses. So if you put your stop too close behind this one, it's likely the market's going to come back down and retest it before moving higher. And this is what we saw in this market here in the Australian dollar 15-minute. What would be better to do, if you get a buy signal in a market where the prices have just closed above one of the psychological levels, the round numbers and whole numbers, then the best thing to do is to actually place it just below the bar that actually drove through. So this way the trade would have actually remained in all the way through to the next psychological level there. So just a tip there for you. Again, you can see how the market tested here. So there's a lot of testing going on in this market, and if, again, just to remind you and to summarize, if the market gives a buy signal and it's at a psychological line, try and put the stop below the psychological level where the market's been tested, because this way it will allow the trade to breathe a bit more and stop this from actually happening. You can go back and have a look at lots of examples of those. So, not a lot else to report. We'll just go back to the daily chart of the pound, have a look. The market traded to the 62% and also to the 167 level there. Didn't hold because of the Dow selling off, the dollar moving higher, therefore putting pressure on the pound moving lower. So the market's still stuck in this sideways range. We still have support at 165.82 at the moment. We're showing a bit of red there, so the market must be moving lower. It is at the moment. So it's a case of wait and see what happens. Let's have a quick look at the news before we conclude. We've got trade balance in the UK at 9:30, but it's medium impact. PPI, producer price inputs at 12:30. Remember, we're an hour ahead at the moment with economic news items out at 12:30 instead of the normal 1:30 time there. And prelim UOM consumer sentiment is out at 1:55, which would normally be 2:55. So that's it. Let's hopefully get a few pips today. Nothing yesterday. It's not been too bad of a week. But it would be nice to finish off on a high note. So that's it from me for today, also for this week. I will see you on Monday morning. Have a great weekend. And as ever, thanks for your support and also for taking the time to watch. Very much appreciated.